people working in finance understand the financial system, but not money. The people in Bitcoin understand money, but not the financial system. And so you need both to succeed, for Bitcoin to succeed as money.
Willem, thank you so much for coming onto the pod, Bitcoin Rails. How are you doing, Willem Schroe?
Very good. Thank you. Thanks for inviting me. Great to be here.
It is my pleasure. I've been looking forward to this conversation. You are, of course, the CEO of Botanix and the creator of Spiderchains. Is that how you would identify?
Correct.
Okay. And just for clarity, so Spiderchains is sort of a unique L2 architecture that we're going to get into in some depth. But Botanix is the company that is creating the primary implementation for Spiderchains.
Correct.
Is anyone else working on Spiderchains? Are there any other companies involved in the development of Spiderchains other than Botanix, or has Botanix really got the lock on this L2 architecture?
That's a great question, actually. So while the core of the Spiderchain is being developed by Botanix, similar ideas of design concepts have been copied in the world. So that's awesome.
Copied or like parallelized like creation? Like
there's not something like an alliance really,
okay.
But people have seen the insights. Oh wait, there's actually quite some novel thinking and ideas in the concept of Spiderchains, and so some of those concepts have been used.
Okay, so people are inspired by the Spiderchains. There's a building going on that takes from sort of the Spiderchains idea.
Correct.
Okay,
but
so
the core building is with Botanix.
We'll chat a little bit about kind of what Spiderchains is, how it works, what problem it's solving, which I think is actually really the key thing. But yeah, tell me a little bit about your background first, just to kind of contextualize the interview. How'd you get into Bitcoin, by the way?
Sounds good. That's a funny question. I feel everyone always has their own weird story on how they got into Bitcoin.
Of course.
For me, I grew up in Belgium, was heavy into mathematics, became a national champion there. Then ended up doing electrical engineering and research in cryptography. That was mostly on authenticated encryption, where I focused on. But of course, I was in cryptography classes in 2013. Belgium is quite ahead in terms of cryptography in the world, very well recognized.
Peter Wille went to the same
there.
school as you, right?
Absolutely. You had David Chaum had a good stint there as well. And even today, it's quite far ahead always. Very good surroundings of good cryptographers there. And then, I saw Bitcoin in my cryptography classes, funnily enough, and
really?
was very interested in it from like a cryptography lens.
What year was this?
That was like 2013, 2014.
So they were talking about Bitcoin in an academic setting in Belgium in 2013.
Yeah, which is quite unique. I don't think
Wild.
it was in any cryptography classes at that point.
No, barely in any today.
Yeah.
Super interesting. Okay, so 2013.
Very interesting, because I think my cryptography professor is still of the same opinion. He believes that it's really hard to do actual Bitcoin because you always have some type of interface. Like the protocol in itself is secure, but the moment you have to put in your private key somewhere, you're using a screen, you're using a computer, you're using hardware. And so he always said like the problem there is not the keys itself or the algorithm itself, it's how you interface with it. And think about ledgers. How do you even know your ledger is real? Think about just your laptop that you buy in the store. Or if you order it from Amazon, how do you know that laptop isn't tampered with? And so those are the big attack factors you'll never be able to fully secure. So he had a very, very hot takes about Bitcoin, of course. So very heavily into the cryptography. But yeah, that was my first touch point. And then, on a second side, I studied together with Stephen Roos, who is working on Ark these days. And so he was heavily into Bitcoin already, also from a price perspective. So he had some Bitcoin, always showed me the charts. So that was my entry into Bitcoin.
Wow. And then did you immediately start working in Bitcoin from there, or?
No. So I saw the cryptographic side. I saw the novelty about it. And I was like, oh, this is cool. And then I started working in chemicals. So I worked 6 years in chemicals. And I actually got back into Bitcoin around 2017, 2018, when I saw, or when I moved to Saudi Arabia. I saw hyperinflation starting to happen in Lebanon. I saw people getting their bank accounts seized. And that was the game changer for me. That was my full blown, okay, I'm never leaving this. I'm going to help Bitcoin as fast as possible become a global currency. That's when I saw the macro picture of it. You have the cryptography, and you have the real reasons for sound money, why this is a game changer for every person in the world. And that realization only came later to me. And that's when I started digging deep into Bitcoin, started running a bunch of different Lightning nodes, started working on a bunch of different open source stuff, building even something comparable to like Start9 and things like that, and Umbrel. And then, then funnily enough, I was still living in Saudi Arabia, so I moved to Boston. So I went to Harvard Business School, so completely different angle. And that's actually where I came up with the idea for Botanix, with a singular vision that's still exactly the same today. Actually, within Botanix, we discuss it every 2 weeks. Every 2 weeks, we say, how are we going to bring Bitcoin as fast as possible in the hands of every person in the world? That's a singular goal. And I think we need to scale Bitcoin for that. I was in school. I was with a lot of whiteboards around me, and I was like, how the hell will we ever scale Bitcoin? And so Boston is actually a great area to be around because very good cryptographers around there as well. And I was coming up with a bunch of different designs, looked at roll-ups, looked at other designs, looked at side chains, looked at the Lightning Network, and that's where I designed Spiderchains.
So it's interesting. So you saw this sort of inflation dystopia picture kind of starting to emerge in Saudi Arabia, and that kind of tipped you off to Bitcoin. But it's funny. It sounds like you very quickly realized that if it's not self-custodial, then it doesn't work, right? I mean, there's a ton of store of value maxis who are spouting on about inflation, but many of them do not fully understand the reality is that, this is not going to be a functioning system long term if we can't scale it to 8 billion people. How quickly did that become, or, let me ask the question, did that feel like this is the pressing issue in Bitcoin for you to solve? Like this is the most important problem facing Bitcoin is self-custody, essentially?
Absolutely. I think without self-custody, I think Bitcoin is just gold. We already have gold. Gold functioned for a very long time very well. And even today, you can buy gold ETFs, right? And so it is sound money. So what's the actually...
Well, you can custody gold, but most people don't because it's impractical and
it's impractical.
Ridiculous.
You cannot send it.
Right.
You cannot divide it. It's so many different downsides. But Bitcoin you can. But however, today, I mean, look at where we are today. I think we're on massive crossroads today. We can go one way, the paper Bitcoin road. And I think that's not a good road to go into.
And that's probably where we're headed realistically right now.
That's where we are right now. And it's heading more and more towards that direction. Like 2024, 2025, upcoming ETFs was horrible for Bitcoin, in essence, in its adoption as global money. Yes, price goes up. It's easier for people to buy paper Bitcoin. But paper Bitcoin, you'll just end up in a world as gold.
Right. It's the same thing. It's so funny. I never actually put that together. I mean, practically you think about the downfalls of gold and you're like, it's impractical. You can't send it. It's difficult to custody. But really it just does boil down to a custody problem ultimately. Like that is the core issue with gold.
Yeah, absolutely. And you can think about, okay, isn't that sufficient? But it's not. If not every person and currency in the world becomes Bitcoin, then governments will just end up inflating their own currencies over and over again. And people will protect themselves with real estate, with paper gold, with paper Bitcoin. But that's not a better world. That's not a world that I will be fighting for. Or want to be living in. I want to get rid of fiat currencies. I want to get rid of inflation, which just drives inequality, which just allows governments to steal their people's money for real, like seize their bank accounts, seize other countries' bank accounts. And that's unfair.
Right. I mean, basically, if you don't have self-custody, it's not permissionless, maybe is, a way to say it. So how did you start getting involved in sort of researching all of these different scaling solutions? Like, give me a time period. Like, was this like 2020, 2021? Like, when did you go really deep down the scaling self-custody? How are we going to get it into 8 billion people's hands? Rabbit hole.
That was 2020, 2021.
Okay.
Really. 2020 was very heavily into Lightning.
So Lightning was the main thing then?
Yes.
Okay.
And then, of course, I saw the rise of EVM smart contracts, saw the rise of stablecoins, saw actually applications reaching product market fit.
Were you shitcoining, Willem?
I was never a shitcoiner.
So what got you interested in sort of the Ethereum land environment? I mean, was it that you thought that maybe there was more to life than payments? I mean, did that occur to you pretty early on, or why were you looking at Ethereum in 2021?
That's a great question. Well, why was I was at Harvard Business School, and I was by far the only Bitcoiner there. And you have blockchain clubs, and a lot of people back then was FTX, was the rise of DeFi summer, etc. And I was like, that's all bullshit. And so we had so many good discussions, actually, really proper debates. And I said the only thing that matters is sound money, right? And it's actually very interesting how you actually can see from someone's background if they're going to be more inclined to be a shitcoiner or a Bitcoiner. Bitcoiners often think the financial system is purely payments, right? If we solve payments, we solve the financial system. And that's actually not the case. So you have a lot of people in private equity, in banking, etc. And anyone in that world is super interested in DeFi because this is permissionless global banking, right? And so they were all interested in nothing that had to do with Bitcoin, which baffled my mind. And so at a lot of debates, I think that I told a lot of them, this is just going nowhere. And they actually convinced me that it had product market fit. So I realized a few things for me have very big use cases and product market fit. That is one obvious by now, stablecoins. It allows anyone in the world to permissionlessly get exposure to US dollars. Think about emerging markets. So many people live under excruciating inflation. All they want is dollar exposure. And longer term, I actually feel stablecoins are going to be a segue into Bitcoin because it makes so much sense. Try to convince anyone who has never heard of Bitcoin or anything in emerging markets with a currency that is inflating 10% about US dollars that they can own on a stablecoin permissionlessly outside of the hands of the government, they immediately get it. Now, the gap from understanding stablecoins to Bitcoin is not that big. The moment they see that the US dollar is actually also printed by a government, which also inflates, they'll immediately get like, oh, Bitcoin, right? Because no one is in control. There's no government. It's sound money, no inflation.
Well,
right?
And I think as a practical matter, a lot of folks who are dealing with, currencies that are shitting the bed, basically, may actually understand this, but they do have to pay their expenses in, real world terms, which is usually dollar denominated terms right now. So I think, to your point, it makes sense that stablecoins will be a stepping stone on the way to maybe hyper-Bitcoinization, where we'll have things actually priced in Bitcoin that are useful for real life.
Absolutely. So in terms of applications that I really think have product market fit, in terms of a decentralized financial system, which I think is needed. Bitcoin decentralizes the money, but you need a decentralized financial system. Otherwise, you end up with paper Bitcoin. So we've seen stablecoins. The second thing...
You think DeFi specifically prevents paper Bitcoin, not just payments?
Correct.
Can you give me an example?
So think about borrowing, lending. Think about Aave, right? You can now borrow and lend against your Bitcoin anywhere in the world, permissionlessly, censorship resistant.
So basically, access to financial services outside of just payments also needs to be permissionless. Otherwise, we're just like not serving the majority of the world, basically, is the argument.
Correct. Yes.
Interesting. Yeah, no, I love that.
And funnily enough, there's a very big connection between payments and the financial system. They're intertwined. I built a strong belief over the last few years that if you only have payments, but not the financial system, that's never going to take off.
No.
You need the financial system and the payments to be together. Because where do you pay from? It's from your savings account, right? Where is your savings account? In the financial system. So they're intertwined and you need both to pick up. And yeah.
Is this an argument for basically DeFi has to come to Bitcoin specifically, right? Like if Bitcoin is the account unit, then we need to have DeFi that actually functions with Bitcoin and not on some other.
Absolutely. And I 100% believe that will happen because actually for the listeners here that might not be Bitcoin aligned, and even for the Bitcoiners, to counter the argument, why not use wrapped Bitcoin on Ethereum? Why isn't there just a whole future where Bitcoin is just digital gold and you have wrapped Bitcoin on Ethereum in the financial system there? Why not? It's very logical, right? And maybe that's where we end up. But then you can also do the thought argument or the thought. Why not just paper gold? Like Tether has XAUT, it's called, I think, Tether Gold on Ethereum.
So
why do we
true.
even need Bitcoin then, right? You can just build a whole financial system with Tether Gold on Ethereum, which is exactly the same type of construct.
People
right?
are just repeating the same mistakes over and over and over again, expecting different results. It's like actually the same problem.
Yes.
But I think these folks probably just don't even realize what the problem is to begin with. I mean, so many people don't have sort of like basic monetary literacy that I think Bitcoiners take, for granted. Most people, even working in finance, don't really understand how money really works,
Absolutely.
and like what the problem is.
It's so funny. The people working in finance understand the financial system, but not money.
Exactly.
The people in Bitcoin understand money, but not the financial system. And so you need both to succeed, for Bitcoin to succeed as money. But yeah, to come to the argument, will Bitcoin DeFi be a thing on Bitcoin, is there's two big arguments and wind in the sails for it. One, besides the two big arguments, economic arguments, you have the ideology. If I'm operating a Bitcoin financial system, I kind of want it to be secured and on Bitcoin. That's ideological. But there's also economic arguments. And you see it with Botanix, actually. What we bring with Botanix is proper Bitcoin yield or interest on your Bitcoin, which is interesting. On Botanix, you pay your transaction fees and your gas fees in Bitcoin. So in essence, the more Bitcoin is being used as money, as a medium of exchange, the more gas fees there are, and the more interest on your Bitcoin you will get. So
assuming that the number of, operators or like effective miners doesn't change to match that money that's being created, basically, right? I mean,
correct.
Yeah.
And so I actually always thought that Bitcoin yield or interest on your Bitcoin is a direct indicator of how much Bitcoin is being used as a medium of exchange. If you want to see if Bitcoin is succeeding as a medium of exchange and not just a store of value, look at how much interest and yield you can get on your Bitcoin, because that is an indicator of the financial system.
That's a really, really good point. And we had this conversation last night. It was kind of an aha moment for me. Like TVL doesn't matter. Like it doesn't matter if you have this inert money sitting on your chain. Like what actually matters is if money's moving on the chain, if transactions are happening.
Exactly.
Which is, I think people wildly misunderstand in DeFi land.
Yeah.
Okay, so let's back up for a second. So 2021, you are, it sounds like mostly focused on Lightning, but you're also kind of getting some exposure to sort of EVM and other kind of like alt-chain architectures, I guess, via mostly your colleagues in school. How did the idea for Spiderchains come up? And yeah, what was the core problem that Spiderchains is solving? Like, what is Spiderchains and why?
Very good question. So if we take a step back, what I wanted to do and where I think the future is going to and what Bitcoin absolutely needed is, I think, the EVM as an operating system. Mm-hmm. It's got nothing to do with Ethereum, the money, or Ethereum, the asset. Pure the EVM as a virtual machine is an operating system. I think that has won out as an operating system. I compare it to Microsoft in the 80s or Windows in the 80s. Was not the best, not the most secure, by far ahead of anyone else in terms of adoption. Mm-hmm. So the EVM has proven smart contracts, has proven product market fit, has a huge amount of money in there for years and years and years, and is so far ahead in terms of infrastructure. So I believe the EVM had won out. So I built that thesis 4 years ago. Bitcoin is a winning money. EVM is an operating system.
And specifically, like the operating system of DeFi. Like EVM is the computer you want to be using to execute these DeFi smart contracts. The question is like, what's the base layer that you're putting it on top of?
Correct. So now you have Bitcoin. How do we fit the EVM in there? And then the third property that became very clear to me is you need decentralization. If you want to live in a global financial system that is truly censorship resistant and permissionless, that means decentralization. That means being spread across global jurisdictions so that one single country cannot control the financial system. So you need decentralization. It needs to be EVM, which is already a hard problem because Bitcoin is UTXO based, of course. EVM is not.
Right. How do you connect EVM with Bitcoin, basically, is the question. I mean, and by the way, many folks, everyone watching the show will basically be very familiar with this problem. This is like a chronic problem that we're always talking about, is how do you bridge Bitcoin to basically any other execution environment in the world?
Exactly. So that was the black box.
This is the problem.
Constraints. You want to bring EVM in a decentralized way to Bitcoin.
And when you say decentralized way, explain exactly what you mean by that.
Yes.
Because right now, would you say that like the other ways that people are trying to connect EVM to Bitcoin, there are several, are not so centralized? I mean, is it not so decentralized? Is that the argument?
Yes, two different things. One, decentralized is a very sensitive word in the Bitcoin world because Bitcoin is utterly, extremely decentralized.
Layer one,
exactly. What I mean by decentralized is not a single party being in control. Another word you could use is distributed. You don't want a single party to be in control. And why that's such a big focus, and I think in the world of scaling Bitcoin, we at Botanix are the only ones really focused on bringing a distributed or decentralized financial system to Bitcoin. And
specifically, I mean, just to like really like hone in on this, because this was an aha moment for me last night. It's basically a distributed bridge. I mean, essentially what you're talking about is a decentralized bridge. All day long, we're talking about bridging, but we're talking about a bridge, one bridge from Bitcoin to some other execution environment. And what you're suggesting is, you know, what if we actually separated this bridge into like multiple bridges, essentially, that were somehow connected? And I mean,
exactly.
Am I getting this right?
Okay. 100%. Basically, I looked at the design landscape. So one of the requirements, I had to be decentralized because I believe in that for the financial system. So I looked at the landscape of designs, right? You have Fedimint, basically bringing a bunch of different federations all together, right?
They effectively have, I mean, it's not a bridge, but they effectively have like a decentralized system of creating payments on top of Bitcoin, functionally.
Correct.
Yep.
You have singular federations. Think Liquid, think Rootstock.
Think any sidechain, and for that matter, most of the L2s being built today would fall under that model. Every roll-up, every BitVM roll-up, etc.
Correct. Then you have the Lightning Network, one of one. Actually, there's thoughts and ideas around Lightning factories, but Lightning Network, in essence, is a one out of one multisig with another party, and then another one. And so when you scale and zoom out, the Lightning Network is a global network of one out of one connections, which is beautiful, which is fully decentralized.
Totally decentralized, distributed. I mean, again, I'm not going to use the word bridge here because it doesn't make sense, but yeah, I understand what you mean, right? Like there's a million different multi-sigs that make up Lightning. There's no one singular honeypot. That might be a key word here, is honeypot.
Yeah, correct. And then in Ethereum land, you had what we call rollups. Now, rollups are a very extreme centralized version of that where they can go extremely fast. So rollups were designed to basically inherit some of Ethereum's censorship resistance, but designed to be extremely fast, singular, one operator, one sequencer, and indeed also a federation or security council managing it. So that was the design landscape.
Okay. And so, yeah. So what did you like? What did you not like? How did Spiderchains sort of come out of that? What was the architecture of Spiderchains that kind of came out of this landscape that you were looking at?
Absolutely. So I looked at it and I was like, how do we decentralize this whole EVM landscape, right? because for an EVM, you only had the possibility of a single federation.
Well, and it's interesting you mentioned that because we just went through all of these different architectures, and all of the ones that used EVM were these singular bridge, right?
Correct.
Like every single EVM option was a singular bridge model. All of the other kind of distributed L2 options like Lightning, et cetera, are not EVM. Yeah.
Correct. Exactly. And that is the core point.
Interesting.
So you either had the choice, you go for a federation, fixed federation, securing an EVM bridge, or you go for a more roll-up, trustless style, singular federation with with proofs and an EVM operating system with a singular sequencer, in essence. Or you had the more distributed, decentralized versions, Lightning, Fedimint. And I came to the conclusion that they're not mutually exclusive. And so where the spider chain design started is actually with Lightning. Imagine if everyone who is running a Lightning node would also run a singular EVM environment, for example, right? You both run the Lightning nodes and you both run an EVM chain, right? And every Lightning node needs to put up a stake, some Bitcoin, and they all secure the same EVM. They all run the same EVM. That is fully distributed, it's fully decentralized, fully possible. It's a similar comparison is imagine if all Fedimint node operators would actually also run an EVM chain.
So they're basically all effectively contributing. It's like you have a bunch of different Lightning nodes or multi-sigs for that matter, if you want to call them that are securing the same execution environment in the sky.
Exactly.
And so by that measure, you are distributing the honeypot because there is not one singular wallet protecting the peg into this execution environment or into this rollup.
Exactly. So the best comparison is take all the Lightning nodes and they secure a singular EVM environment. Take all the Fedimint federations, different smaller honeypots, and they secure one single EVM environment. That is the basic design, very high level of spider chains. And then you bring it into a practical sense. And you come to the conclusion that the big differentiator there is, one, it's decentralized. Second is, if you compare it to rollups or BitVM or federations, you have a single honeypot. One single contract
point of failure.
or point of failure, or one single federation where theoretically you expect the whole global financial system to be in one single UTXO. That's kind of weird and risky, you know? Like, I'm not sure if people have thought it through, but
it's so
that's
true.
weird.
And it's funny. We don't we talk about L2s constantly on the show. This has never occurred to me until last night. Like, this is such an under-discussed topic, right? That, like, realistically, when you think about it, like, where are all of these single federation L2s, roll-ups, side-ups really heading? Like, you're going to have all the money of the world, like, in one, BitVM federated bridge operator set, like, it's just like, by definition, the vulnerability of that wallet increases with the amount of money represented in that bridge, right? You have like a that's a scaling problem in and of itself.
Yep.
Absolutely. I love this. I'm like super into this. Okay.
Yep.
So, and really, like, there's no other, and this is the only one that's doing the sort of distributed style for EVM specifically.
Correct. We're the only ones going after decentralization plus EVM. No one is doing that. It's funny because in Ethereum land, people always say, "Oh, we don't really need decentralization." That's like it's a meme. People don't care about decentralization, which could be true, but people don't care about privacy until it's too late.
Correct.
So
people don't care about self-custody until it's too late.
Correct. And so it's utterly important that you actually build something that can run a decentralized distributed financial system. Because if you really play it out and you have a singular liquid federation, a singular rootstock federation, or a singular roll-up federation, you might end up with 5 million Bitcoin in a singular honeypot with some code that It's probably very secure, but do you really trust that?
Right. Even if it's like a negligible risk, like negligible risk of losing 5 million Bitcoin is completely untenable. I mean, it's almost like quantum, right? Like it's like it, even if you think it's like a never going to happen, type of situation, if the risk is this tiny and negligibly small, multiply that by loss of 4, 5, 6 million Bitcoin, all of a sudden it's a real problem.
It's a massive problem.
Yeah.
Especially if you think about jurisdictions and countries. Like if someone has control over the financial system and it's only a few parties, then you're in troubles. Then you can basically just use the financial system we have today. Why would we ever then have a decentralized financial system if we can just have paper Bitcoin in the current financial system, as we're doing today with BlackRock, Bitcoin on the books? Yeah, that's not how we get to hyper Bitcoinization.
So if we have distributed federations, we're going to talk a little bit about dynamic federations, which is sort of the technology that supports how this architecture could work, maybe in a moment. But so essentially, like the key point here is if you have distributed federations, then hackers can, by definition, only get some of the Bitcoin, right? Like it can all, right? Like if a hacker, manages to get into some federation, they can only take some portion of the Bitcoin that's represented by the multiple federations that might be protecting that bridge.
Absolutely. Think about, okay, now let's say the future financial system has 5 million Bitcoin in it. Let's say that's secured by a singular federation or by thousands of federation that actually has no theoretical limit. And you can keep scaling that. And so your attack factor becomes thousands of X smaller, in essence.
All right, guys, I want to take a quick break to thank you for watching and remind you to click the follow button on my profile if you want more Bitcoin technical deep dives like this. I also want to give a shout out to my partners for making the show possible. My leading partner, Best in Slot, just released the programmability module for BRC20, making the execution of smart contracts possible for the protocol. I know that's been long awaited by the BRC20 community. Alongside this release, Best in Slot put out what is arguably the most sophisticated DEX for trading Bitcoin native assets called Coin Cooker, which I also highly recommend checking out if you want to dive into the BRC20 trading game and get started executing smart contracts on Bitcoin. I'd also like to thank Cetrea, building one of the leading implementations of a BitVM style bridge for Bitcoin. Cetrea is building what I think could become the canonical Bitcoin rollup, enabling programmability, scaling. Really anything is possible with a trust minimized bridge, which is the unique value prop of these BitVM style rollups on Bitcoin. Lastly, I'm thrilled to announce my newest partner, Spark, which is the leading state chains protocol on Bitcoin. State chains builds upon what was made possible by the Lightning Network for payments, but without the liquidity constraints and the UX challenges that often make self-custodial Lightning impractical. Spark is also led by one of the leading payments infrastructure teams on the planet, including founders from PayPal, Facebook. They're incredibly well positioned to turn Bitcoin into a true institutional standard for payment systems around the world, and I couldn't be more excited to support what they're up to. All right, on that note, let's get back to the show.
Okay, so I'm going to ask you kind of a spicy question. So, we're sort of talking about, okay, but in this theoretical universe, it'll be so negligibly small that, the possible hacks will barely, if ever, they will, never happen in this trust minimized world, theoretically. But I want to talk a little bit about BitVM because you got into kind of a public argument with the Cetrea folks who are sponsors of the pod and who I love, and we think we're doing great technical work. But I think this is still relevant and important information to share. You're saying, practically speaking, there are some challenges with BitVM in terms of its actual trust capacities, basically. You want to share a little bit about the conversation that you got into with Orkin a few months ago?
Absolutely. I mean, this is a while ago, but it is still absolutely valid.
Okay.
I think you have the theoretical world and you have the practical world. So theoretically, you can make BitVM trustless. Practically, you cannot, and you just come back to a federation trust assumption. And the reason is upgradability or code, in essence. Let's say on Bitcoin, you implement this BitVM. It holds 5 million Bitcoin. And then 10 years down the line, 20 years down the line, imagine it's year 2070, right? A vulnerability is found, a problem in the code. What are you going to do? Can you upgrade that? No, you can't, because it's fully trustless and it's set there in stone in your UTXO. You cannot do anything. Or what in reality everyone does and what's practical is you make some type of upgradability or emergency hatch that you can say in emergency scenarios, these 15 people can upgrade, right? But that's also immediately your attack vector, right? Because if you hack those 15 people, then you have access to the 5 million Bitcoin. In Ethereum land or in EVM land and rollup land, they call these security councils. Basically, in case of emergency scenarios, you kind of want to have access to that Bitcoin so that it is not lost. And that is a very practical thing. You kind of want to have that, right? Who wants to trust a BitVM bridge that actually you don't have any emergency paths? Right?
I mean, basically, you have to choose between the risk of not being able to upgrade because there is no actual sort of group of leaders who are able to make those upgrades, right? In this completely decentralized, permissionless world. Or then the other side of the coin is you do have to have some trust, basically. You do actually have to trust some of these operators in this bridge. It's like choose your hard, basically.
Exactly. So BitVM on its own, absolutely genius. Love it. And actually, there's possibilities of the future where BitVM and Spiderchains, together with proof of stake, actually might become the final solution in essence. Or you have the current solution, and that's where the argument was about. They were arguing that BitVM is fully trustless and there's nothing like a security council, there's no federation assumption. And I called them out on it.
I pressed them on it.
I pressed them on it. There's no way you would never have a security council because at that point, you can never upgrade your contract. I mean, even everyone, if you're following Bitcoin, I think in 2018, there was like an inflation bug. And that's 9 years after development and start of Bitcoin. So making something code-wise without any bugs, that just doesn't exist.
So this is basically the core TLDR with BitVM is amazing and as a trust minimized as it could possibly get if it became technically perfect, right? In this BitVM utopia, you are still ultimately probably going to have this, emergency hatch security council situation where by definition, collusion could potentially occur. That risk will always exist in this BitVM utopia universe, basically in the future.
Absolutely. Ultimately, you're coming back to a federation assumption. And this is outside of the BitVM. Let me clarify that. BitVM on its own can be trustless. However, you need upgradability. And so you need to implement an escape hatch or an emergency path for upgrades.
Which is a practical consideration, basically,
correct.
Right? You could make BitVM fully, truly trust minimized, but the practical consideration of how do you upgrade it would be missing if you don't create this security council emergency hatch federation assumption, basically.
Absolutely.
Yeah. Which is pretty, it's worth mentioning, this is something we should be talking about.
We should, and we cannot hide it. And that's where the argument was.
I love this idea, though, of BitVM combined with Spiderchains because this federation assumption effectively goes away if we solve the secondary problem that Spiderchains is solving, or this, secondary issue that Spiderchains is trying to solve, which is let's decentralize the federations. And then, I remember last night, you were sharing that all of these decentralized federations could be secured by BitVM, and then we're really in paradise.
Yeah, no, absolutely. I mean, if you think about bridges, you need to care about decentralization. That's what we're solving with Spiderchains. You need to care about trustlessness, which is what BitVM is there to do. Now, these are totally two different things. And you can not today because it's not fully modular yet and we're not there yet, but they can be clicked together so that basically the Spiderchain is a series of distributed federations and you keep making new federations. What if every new distributed federation you make is a small BitVM federation?
I love it. I love it. Yeah, no, this is amazing. Yeah, I mean, essentially what you're sharing or sort of the realization I came to last night is, right, a lot of these sort of, kind of the major L2 architectures that we're talking to, but let's talk about BitVM and Spiderchains as examples. They're solving different pieces of the security puzzle, right? And they can actually ultimately be combined together to strengthen and sort of battle-proof whatever this, connection between Bitcoin and another execution environment is.
Yeah, No, absolutely. I mean, we're all building blocks in essence. Like what we're building with the spider chain is basically the upgradability that the BitVM folks are eventually going to need. How do you move from one BitVM that you made today in the year 2026 to, oh, we want to upgrade. We need a new BitVM. So we need to make a new federation, a new BitVM instance. And then after a few years, we want to upgrade again, or after a few months. And so that shifting of BitVMs, the upgradability, is exactly what we've built with Spiderchains. And so BitVM provides the trustlessness, but nothing around the distribution or the decentralization. Now, so you have the BitVM, the trustlessness part, Spiderchains bringing the decentralization part, the distribution part, which makes it censorship resistant. And then the third part is what's needed to actually ensure the security of the decentralization, which is what we call the stake, the proof of stake. So we've seen a lot of people working on that as well. And
Jeremy Rubin. I think we talked about that last night, right?
Exactly.
Yeah, exactly. Let's get sequencers decentralized, you guys.
Yeah, funny thing is, in Ethereum land, Ethereum layer 2s, they still have, I think, all except for Starkware, who announced their 3 out of 3 sequencers. The rest all just run one single sequencer, one operator. And think that 20 years ahead or 50 years ahead, one government can censor one single sequencer.
Right.
So it's not censorship resistant in essence.
I guess Babylon is also trying. This is the problem that Babylon's trying to solve. It'll be interesting to see. I think, again, they're going to have some competition probably in 2026, 27. But yeah, like this is another really good example of these are not competitive technologies. These technologies are all going to be building blocks, as you say, that kind of come together to secure this sort of Bitcoin DeFi future utopia that hopefully we're working towards building.
Absolutely. Like the proof of stake basically ensures today with Botanix, we run 16 operators. So Botanix runs one, and then the other 15 are spread around the world, distributed across the world, different jurisdictions. Now, of course, you want a proof of stake with that, right? So that's the third piece, I would say. You need some type of proof of stake to ensure the decentralization of your bridging technologies, and then you need to make it trustless. So in my mind, all these technologies are different building blocks coming towards like a final bridging solution where you can have distribution, trustlessness, and it's secured by staking Bitcoin.
Okay, so let's say we have this, let's just like paint this picture, right? So, one day in the future, 10, 20 years from now, maybe sooner, who knows what will happen. We'll have, spider chains that are all protected by BitVM bridges. Each individual federation is protected by a BitVM bridge. Each of the, we have sort of the L2 that's secured by proof of stake consensus, but it's Bitcoin native stake created by, Jeremy Rubin's Char or Babylon or whatever. We have this amazing utopia. Are there any other technologies out there right now that you imagine having a place, that will have a place in this kind of magical ecosystem that we're building?
Well, there's one left, and that comes back to the original idea of Spiderchains, which is lightning factories. So with Spiderchains, you actually make all these sequential federations, right? And yes, they can talk to each other, but only by on-chain transactions, right? Every time you move from one federation to another is an on-chain transaction. You can question how scalable that is. But the original design of the spider chain, and actually very few people know this, is instead of having federations, just distributed federations, you can actually make them lightning factories.
Do you need it to be lightning factories, though? I mean, couldn't you connect spider chain federations just with lightning, just pure red lightning?
You can, but if you want a federation, you want them to run like a full lightning node, which would be more a lightning factory because there's multiple parties in that lightning node.
Sure. But you could do that. I mean, if every spider chain federation just ran a lightning node and that was sort of baked into the cake, I mean, you could have this today.
That's kind of the idea.
Okay.
And then you can actually very easily balance and distribute this one single honeypot that you have in a lot of L2s and designs now. You can easily spread it out over all the different
liquidity balancing for all of the distributed honeypots will be made easier by lightning.
Correct.
Yeah. This is very similar to, I think Fedimint is actually doing something similar where Fedimints are going to be sending money to each other theoretically with Lightning. Ark Federation servers, I think, or Ark servers, I think, are also doing the same thing. Do you sort of agree with the sentiment that Lightning will be the interoperability layer of Bitcoin? I think this is kind of a meta that's happening right now.
Oh, 100%.
Okay.
I've believed this for a few years. Like, I think even 4 or 5 years ago, I got into a massive debate where I never thought that Lightning is for retail. I think it's incredible that it's possible for retail, but in essence, it will be mostly businesses that end up running Lightning. And actually, very funnily enough, because we are somewhat between Ethereum land and smart contract land and Lightning land, is when you think about the bridges you have today, you have Lightning. This is the best bridge you can have. This is decentralized, this is trustless, and this is free and instant. And think about all the other bridges that are getting very popular in Ethereum land. Think about CCIP, or think about Layer 0, and there's quite a few others, right? XLR, etc., etc. They're all running fairly centralized solutions. Okay, it's a handful of parties, and it's not super fast. It's not super costly, but it still costs something. And if you compare that to Lightning will be the interconnectivity layer between all the businesses, between all different bridging solutions, just because it's instant, it's fast, and decentralized. You cannot, like, that technology is just incredible. So I 100% believe Lightning will be the interoperability layer and the communication layer.
Interesting. So speaking of, again, I kind of mentioned Ark earlier. Ark is the other, I guess Ark and Fedimint are sort of the two other architectures that maybe we can reference that have the sort of decentralized federation model. Are there any others that I'm missing, or are those the two that kind of really come to mind?
That's the two that come to mind.
But you would say like their challenge, or like probably the downfall of them, is the fact that they don't have EVM and they can't offer kind of DeFi broadly, right? They're missing the DeFi, the finance piece of it. Is that kind of like your core critique?
Yeah. I mean, my core critique, it's not a critique, it's more a consumer question, I would say.
Okay.
In essence, like, technology is absolutely beautiful, very amazing. I just have questions because definitely Arcade is going for programmability. I think second, where Steven works is still going for scaling of payments. So I think in terms of programmability, I'm not sure you will ever be able to compete with the EVM in terms of operating system. You're going for programmability, which means operating systems, and you're so far behind. I think if there was a viable road, we would have seen more adoption of Liquid.
This is sort of a really key point, because you're right. We talk about this also often. We have Second and Arcade, these sort of two different implementations of Ark. Second's obviously just completely focused on payments. They don't really care about DeFi, at least anytime soon. Arcade is going for DeFi, but they're using a version of Bitcoin script, or sort of like an adapted version of Bitcoin script to get there. You think that this is sort of a non-starter, in your opinion, because it's just going to be really difficult to get all of these builders using Bitcoin script or some new script at all, not to mention just having to build the entire DeFi economy again from a completely new programming language. Is that sort of the idea here?
You start a new programming language and you need to build a whole new infrastructure for it.
It's a big job.
Just FYI, at Botanix, we're working with more than 50 infrastructure companies. So imagine that you would have to build all of that from scratch, or hope that it naturally happens. But we're already so far ahead in the EVM world. That's one thing. That's infrastructure network effects. I think the second is limitations. Bitcoin script has a lot of limitations, and it actually got to do with that it's not a global state model.
It was not made for programmability.
Yes, and you can question global state. A lot of people say it's not secure, and UTXO is more secure. But in terms of economics, global state, you can do much more things. Like all these smart contracts, they talk to each other because you have that global state. You can have oracles, you can have all these smart contracts communicating to each other, all because you have that global state. And that's something you cannot have. And so even if you want to build that DeFi world, I think the interoperability between all these different applications will be very limited just because of your limited programming language.
Can you give some examples? This is an interesting point that I actually myself hadn't even really thought about. When you say you're working with 50 infrastructure partners just on Botanix EVM layer, can you give some examples that maybe people aren't thinking about there, right? Because in my mind, I'm like, what are you talking about? Like the arcade people, they just need to like get some application builders just to hop over to their side of the road. But what you're kind of suggesting is it's not that simple.
It is not that simple.
Okay.
And actually, most people don't notice when you see all these different chains out there. All of them use a lot of infrastructure partners. So think about RPC providers. This is basically how fast you can respond and like protects you against DDoS attacks, etc. So that's basically allowing everyone to run a node and immediately connect to be able to send their transactions. Right. Second is subgraph providers, as we call it. This basically index all the different data. Like once you have a chain, there's so much data. I compare what you can find in, for example, the mempool and mempool space.
This is like the graph and the consensus, right? Like,
yeah.
Is that what they call it in Ethereum land? That's like the company that does all the indexing for Ethereum.
Yeah. Today, there's a lot of different solutions, but indeed, that was the original thing of the graph, and which is important because if you want to run a DEX, you constantly want to know all the different, all the different liquidity positions, the orders that people are going to do, and so you need to have a lot of information that is not immediately aware on the blockchain. Like smart contracts emit events and other things that are typically not gathered by full nodes. So you need like subgraph providers providing all of this information that people want to use in certain applications. For borrowing, lending applications as well, you want to know when you need to liquidate. You're looking for different events and need to bring that all together. So subgraph providers are, of course, a big one. Then oracles. You need to know the price of something. That's the big reason, or one of the big reasons it's really hard to build DeFi on Bitcoin. Well, one, it's because you only get an Oracle update every 10 minutes if you want to post it on the base chain. But oracles need to be able to tell you the exact price on the exact moment, and it needs to be on chain so all the rest of DeFi can act on it. Right? So oracles is a crucial part of any financial system, in essence, right? Chainlink is, of course, became big with that.
So tons of infra, basically, like that people aren't even really thinking about, that are like entire businesses and companies in and of themselves that will be needed to actually to basically overtake EVM. I mean, that's really what you're saying, is that if you want to beat EVM, you have to do all the work that the Ethereum and consensus companies did from scratch, starting a decade ago, literally, to even just like get to where we are now with Ethereum.
And they're all profitable companies. There's demand for that.
And if you can just figure out how to safely and securely connect EVM to Bitcoin, all of a sudden you can just copy pasta all of that code, and it's like no big deal. It's like out of the box Bitcoin scaling, Bitcoin DeFi.
Yes.
Interesting. Yeah, hot take. I mean, of course, I would say like the one other criticism that you hear of folks, because there are now sort of really two camps in the programmable Bitcoin. There's the companies that are using EVM for all of the reasons that you're mentioning, and then there's companies that are, for whatever other reason, using other programming, VM options. I think like the big criticism, of course, is like, well, EVM's not as good as, such and such thing, right? It's not as performant as WASM, as like, I think that's like the main one that I hear about. Your argument, basically, it sounds like, is that's just not enough of a reason to have to go back and do that 10 years of work.
Yeah, it's also not realistic.
Okay. Tell me about that. Why is this argument that like, oh, who cares about it? Because even Vitalik is talking about WASM, like even Vitalik is going on about how WASM is so much better and we should all be upgrading to WASM. What's your argument there?
No, I mean, it's clearly like it has a lot of support. It is probably a better programming language. I think the reality is that that's not the case in terms of adoption.
Okay. So just
not in terms of
straight
security
up adoption
or programming language. Yes. Can you make a better EVM? Of course. People have tried for the last 10 years. Have any of them had any adoption? No. because it's not about the programming language itself. And I always use a comparison for computers and phones. We have operating systems there.
Mhm.
And I'm quite sure a lot of people in the world have thought about the next iOS or the next Android and thought they could make a better version of it, a better programming language. Think about Windows. I've used that example in the 80s. I mean, Linux is by far, if you talk to a lot of people, the better language, right? But it has barely any adoption. And so reality is that not the best operating system will win out. It's the one who has the biggest infrastructure effects.
Okay.
And so EVM is just extremely far ahead. It needs what it's done what it needs to be done, right? It's there, it works. And actually, there's a lot of complaints that it's being very insecure. But I would argue the opposite. We've seen billions of dollars remaining there, being used. And of course, you have new smart contracts every once in a while get hacked, but people learn from that. And still,
Well,
it
they
has
plug the
huge
holes.
adoption.
They
Yes.
plug the holes and then they become more secure. Individual contracts become more secure with time, right? Like if
Yes.
you've had a, contract that's functioning for 10 years, like probably in good shape. Most of these hacks are happening in the first 6 months that these things exist and then they get fixed.
Exactly.
Battle testing, you guys. That's what EVM is.
It's the Lindy effect.
Right. Yeah.
EVM has a lot of Lindy. In
Mhm.
essence, what you're comparing is WASM or even Bitcoin script for applications with, I don't know, I don't know the numbers, but maybe a few $1 billion max in non-extreme difficult applications compared to hundreds of billions of dollars over multiple years in extreme difficult smart contract applications.
Right.
And you cannot compare these two. We haven't seen the proof of test for, maybe very difficult or unique Bitcoin scripts that do incredible, crazy things, right? We haven't seen the proof of time, basically.
I would rather copy pasta, something that's been battle tested for 10 years, written in less performant code, than something in really performant code that's like 3 months old or 6 months old. And like, who the hell knows if it actually is secure, So
And that's the reality.
makes sense to me. Yeah, the practical considerations I think many technical folks often miss in general. Oh my gosh, this was so fun. We're coming close to time, but I will say, doing like the full reference back to the origins of this conversation, something else that comes up all the time is like, how do you think the Bitcoin ecosystem and sort of Bitcoin native Landia, scaling Landia is doing? I mean, where do you think we are in terms of like, is this like reality, this utopia 5 years away, 10 years away? Will we even make it? Will the BlackRockification of the world just, overtake us? Will it be too late for us? I mean, how do you kind of see this all playing out over the next 5 to 10 years?
I think it's not doing good. I think it's doing bad, actually.
Oof.
I
Break
think
my heart.
a lot of people, and if you talk with people from the financial system, especially here in BlackRock and so many others, they all very strongly believe the current financial system will just eat up Bitcoin, and it's just going to end up paper Bitcoin on balance sheets, in ETFs, and so many different paper Bitcoin. And they have a very good argument, and it's very realistic. The only thing that stands against it is us, right?
Well, we'd have to have like self-custodial adoption basically to fight it in time, right? Like the only way that this train stops is if enough actual people who want to hold self-custodial Bitcoin do so before BlackRock literally like owns all the Bitcoin.
Yes, and it needs to be super easy for people to use. They don't even need to know how exactly everything works. And we're not there yet. People don't want to know about wallets, about like, it takes 10 minutes. They want it to be instant and they want it to be easy. That's very clear. And they want it to be Bitcoin. Like how many people, if you ask them on the streets and you ask them to open their bank, would say they understand that it's not actually their money, right?
None.
And most people don't care. And
I
so,
didn't know, highly educated, like most of us didn't know until we got into Bitcoin Landia.
Absolutely. So for me, there's two pieces. One, can we actually scale Bitcoin? Two, where we are competitive in terms of performance of the current financial system, what people expect. And I think that's possible. I think that's doable with all the different technologies that I see right now, the people working on BitVM, with people on Lightning, with Square announcements. It's becoming more and more, but we're not there yet. And the second piece is actually finding some type of breakthrough case that people actually will start adopting Bitcoin in a self-custodial sense without them knowing. There has to be real economic adoption and incentives for people to adopt it.
And specifically of retail. Like we need in order for this sort of the ideological use case of like sovereign money to actuate, we need real people holding Bitcoin, not just institutions, which is interesting because, if you think about it, and this is kind of sad, but the incentives for the L2s, and you'll probably know this better than anyone, are for institutions to use to have, put all their money into these L2s and DeFi platforms. I mean, how do you kind of square that? I mean, is that a challenge? It's like, oh, well, I'm theoretically trying to build money for the people, but also, if I want to build something really, successful and commercially widely adopted, I need to focus on institutional money. That's like the reality of the situation.
I think you need both. That's reality. I think retail doesn't care these days. They might buy a Bitcoin
They definitely
ETF.
didn't care this cycle. Retail did not care this cycle, you guys. Cycle for ants.
Absolutely.
Bull market for ants.
Yeah. No, I think we're still having the ramifications of what happened with FTX. I think that wiped out a lot of interest in the world, and it would take quite some years to rebuild that. However, I think
for retail specifically, you think retail just got like completely fucked by like the BlockFis and the FTXs of the world, and they're just done with crypto right now. They're burnt.
Their belief is burnt. I think that's still the case, and I think it will be hard to like reconvince them. But over time, I do believe that will happen. I do believe institutions and retail as well will find a way once it becomes as easy, as secure, and possible and fast to actually use Bitcoin like it is in the current financial system. That's what people want, and we need to scale Bitcoin for that.
What do you think needs to happen globally from like a macro level? Like what's the trigger to get retail back into Bitcoin?
I think it will happen more from emerging markets, and I think the actual trigger will probably be another inflation cycle. That's the really thing that, and it's bad to hope for that, but it will really educate a lot of people. It's actually funny when I grew up, and maybe a lot of people know about that. When you're like 18, how many people knew about inflation? Right? Just the word inflation. My guess would be less than 10%, maybe less than 15% of all 18-year-olds.
Mm-hmm.
Do the same experiment today. Ask all 18 to 20-year-olds if they know about inflation. And I would say more than 80% knows it.
For sure.
Like the younger generation knows they're fucked.
Mm-hmm.
They know they're screwed. They believe they will never be able to buy a house. They know prices will always go up. What they haven't done yet is they haven't linked it towards like government money printing,
right,
and sound money.
Right. They don't know what causes it. They don't understand that currency debasement is the actual problem, and the government is doing everything it possibly can to try to like blind them to the fact that currency debasement is.
100%. Like it's every few months something else is the cause.
No, it's because grocery stores are hacking up their prices because they're greedy corporate schmucks. Like that's their
price
story.
Gauging, it's tariffs, it's international things happening. But what it's really is currency debasement. And so the moment people will actually start to understand that,
which you think is inevitable.
Inevitable.
I mean, I guess in Lebanon and Venezuela they do understand this, right?
100%.
When it gets bad enough, they will understand what the actual problem is, and that's what
absolutely. And so that will happen. And I think that will be the trigger when majority of the population understands that inflation, which they understand today, everything getting more expensive, the actual root cause is currency debasement. And I think very few people in the world believe that today.
Well, I certainly am not looking forward to those days. But to your point, it is often when something is truly needed that it's adopted, not necessarily when it's wanted, right?
Yeah.
So, well, thank you so much. This was awesome. This was such a great chat.
Absolutely.
I'm so glad we got to do this.
Thank you.